Well, hello everybody. This is Rob Reinhold. You guys know me. I know you probably are a little disappointed that Corey's not here, but Corey is traveling, so you are stuck with me for this week. So here we are. It's July 5th. I hope all of our US-based traders had a nice 4th of July. I know our Canadian traders, you guys had your Canada Day over the weekend, and everyone else, you don't even know that there was a holiday. So let's start off with where we ended off last time, at least I spoke with everybody, and that was over the weekend. And I talked about how this week was going to be a second half of the week story. I have not even looked for really any trades in Forex all week long. I'm now starting to boil down and get serious and start to look at setups, but that was on purpose. It was on purpose because I did not believe that there was going to be good trading activity during those couple days. And frankly, I was right. It wasn't a great last couple days. There was one or two trades there that you could have hit, but that was really about it. For the most part, the week has been quiet. So in this session, we're going to review what's already happened this week. There has been some news that I think will affect the rest of the week. We'll take a look, as always, at the current market, and we'll give all of our currencies scores, and we'll take a look at which ones are moving. And then, of course, we always go through trading setups and opportunities. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? This is where we left off on the weekend. We said, hey, right here, right now, on the weekend, Litecoin and Bitcoin Cash were on a tear. But remember, we said, if you want to trade these, they have to be very, very short-term in nature, because these have gone up so much, they are going to come down quite a bit at some point. And sure enough, that's exactly what we have been seeing the last 2 days. So Litecoin, Bitcoin, we talked about how they were showing the most momentum at the end of the week, but be very cautious. And then you can see everything else was kind of in the middle. Another reason why I wasn't really excited about doing any trades, because nothing really looked like it was moving anywhere substantially. So let's take a look at what happened this week. This week, equities have been flat. We've only seen in the US a half day on Monday, which was a flat day, and we're seeing about a half day on a Wednesday, and it's pretty much a flat day. So we're seeing lots of flatness around in the equity markets in the US. Overseas, we're actually seeing a little bit more weakness. We saw the Japanese and the Chinese markets fall. Europe is down a little bit as well. So flat for the US is actually pretty decent when you take a look at, there's actually been a little bit more weakness and strength around the world as far as equities go. We did hear from the RBA. They came out and did exactly what the market expected, kept rates where they were at 4.1. The Aussie had a brief drop, recovered, and is basically exactly where it was before the meeting. And we talked about those cryptos that were red hot over the last 2 weeks. They have definitely cooled off. The news that's happened this week that I think has some effect here, and I think it's going to have some effect over the weekend, is the China manufacturing numbers. On Sunday night, we got the manufacturing PMI. That came out a little bit better than expected at 50.5 instead of 50. Then we also got the services PMI. Now, the services PMI in China is now starting to become a bigger component to the manufacturing PMI. And you can see this was very weak. We take a look at, again, the regular manufacturing is pretty good. This is a bad number. The market did not like it. This is why the Asia markets tumbled on Tuesday night, Wednesday morning. We also got the US manufacturing that was pretty lousy as well. But we talked about this. Actually, we didn't talk about this with our currencies group. I talked about this with our stock and options group. I said, even if we get bad news, it's going to be good news. Why? The market doesn't want the Fed to get any tighter. The market's already a little bit worried about rates, and any bad news is going to take that pressure off. Sure enough, this number came out. People applauded it. People liked the news. And so, again, they're thinking that the Fed is going to back off here. Other than that, that's really all we've had is one central bank that did nothing and some weaker than expected manufacturing numbers. So if we take a look at what the market actually did, let's take a look at the charts. Here is the S&P. Here are the 2 half days we've gotten from the S&P. As you can see here, this is nothing. Look at the range. Now, we did have a good, nice run last week. Very substantial run, but look at these 2 candles. So there is no overall macro story of equities pushing currencies up and down. The story in equities is just not there. And if we come over here and take a look at the actual performance of the foreign currencies market, other than the Kiwi, which for some reason decided to go up 1%, look at these moves. Very, very muted. And this is why I said I was not all that interested in trading the first couple of days of this week, because this is exactly what I thought was going to happen. There is not a lot of opportunity in these numbers to make any sort of decent returns. Kiwi had a pop. No idea why. I'll check in on that here in a second. We talked about Litecoin and Bitcoin Cash being very dangerous, that you could still play them very short term on upside momentum, but you did not want to be holding these. And sure enough, they've come down substantially. If we take a look at a chart, and we'll take a look at a chart on these, you're going to see that they've just given up maybe a third of the gains that they put on over the last 2 weeks. There's still probably more to go on these. Take a look at Bitcoin, Ethereum. Just a small down week so far this week. Looking at the internals of the market, we are still at a +3, meaning that equities are still in a bull market, a very, very strong bull market at the moment. Typically, that leads us again to have these big macro ideas of the market is going to be pushing up all the risk assets. Aussie, Kiwi, CAD are going to be pushed off with this huge wave of risk taking. We're not seeing that. And we've been talking about that over the last couple of weeks and months. We're just not seeing this broad wave that typically moves everything. It's very specific here. So there's no reason to take a look at correlations between equities and currencies because there is no correlation at the moment. This here is the US 10-year bond. And I do want to point out, we are starting to see some activity. Some activity where we're breaking out of this 385 range, and it looks like 4 is on the horizon. I talked with our stock and options group. I said, hey, if we start getting up near 4, I think the NASDAQ, the Qs start to have a little bit of a problem. They've been very, very strong, but I think they start to have a little bit of a problem. This chart is saying that higher rates are coming, and we know that the biggest correlation to 10-year yields is the US dollar. Let's take a look at a chart on the US dollar to see if we are seeing this same kind of movement. We'll get to that here in just a second. Here is the chart on cryptos. We had the crypto basket, nice high base. We broke out. And you can see we're basically from where this thing started, where we are here, it's given back a third, a fourth. So it's just a pullback at this point. When it comes down to this breakout point at 17,400 on the basket, that's going to be where we need to see a bounce. If we don't see a bounce there, then we're going to go right back down into these ranges and really nothing all that exciting on cryptos. As far as what's on the calendar for the rest of the week, this is why I said I'm more excited about the second half of the week than the first half of the week. We had not all that much news. We had U.S. markets that were closed. Here we are. We're starting to get some more stuff here. The one I want to point out here is on Thursday, tomorrow. Services PMI. This is a number that came all the way down to about 50. This has been one of the stronger numbers in the U.S. economy. It's looking to rebound here. A really good number is actually probably bad for the market, meaning that the equity markets say, oh, the Fed's going to get tighter than we want. any number around here or lower, the market's going to really love. If it's a little hot, that dollar and those bond yields are very highly likely to move higher. So I am watching this report tomorrow, specifically watching the dollar. We also get the job openings. This is a number that no one's watched for years. No one's cared about this for years. And then all of a sudden, the Fed about a year ago said, we want to see the JOLTS job openings come down. And now everyone cares about it. As you can see, they're coming down a little bit, but 10 million is still a huge number. That's not all that substantial. On Friday morning, we've got 2 reports. We're going to be actually trading live, so come join us live. Jump onto the calendar, register, join us live. We're going to be trading the Canadian and the U.S. payrolls report. We're going to be meeting at 8:15 a.m., so come join us live on that one. This is where the fireworks are going to be. So we had a front part of this week that was pretty boring. We start to get a little bit more activity on Thursday, and then Friday is really when the fireworks are going to be. I do want to point out one last thing. We have the FOMC minutes here in about, let's call it 45 minutes. There really shouldn't be that big of a move, but there will be a move, especially in the absence of anything that people are really watching right now. It seems like when there's an absence of news, one news report can actually get a little bit more attention than it deserves. We might get that. So if you are in any trades at the moment, understand that we are highly likely to see a little bit of volatility around the 2 p.m. time frame today. So to wrap up this week, we think equities likely go nowhere, at least till Friday. The jobs report will probably move the equities up or down 1%. But until then, there is no help or headwind from equities at this point. We already heard from the RBA. We'll hear from the FOMC minutes here in 45 minutes. And then the rest of the week, it's really Friday. Those employment reports, that's going to be the important one. Let's take a look at where we stand here in the markets. Let's go through all the currencies. Let's see what's moving right now. Let's see if there's anything that we can identify as a good trade just on one currency by currency basis. And then we'll build our currency table, and then we'll take a look at some potential trades. All right, so I'm going to switch this to a 4-hour chart. And we're going to go with our velocity score here. So we're looking for what is moving at the moment. First thing I want to take a look at, let's jump into the cryptos. And you can see that all the cryptos have more negative than positive price action. This here is Bitcoin. We've got an EMA that's turning down. We got RSI that's weakening. We've got a parabolic SAR that's been pierced. So look, it doesn't look like it wants to be bought at this moment. If we take a look at this on a longer term chart, on a daily chart, you can see that we're now just high basing here on Bitcoin. Bitcoin is high basing. If it comes down to the bottom of this base, I may take a look at taking a shot at this below 30,000. I do like to buy the bottom of bases because if you get a breakout on the next run, it has a great price that you get into, and it's a very easy trade to hold. So below 30,000, may get interested. Until then, totally uninterested. Take a look at Bitcoin Cash. This here is a daily chart on Bitcoin Cash. You can see we could pull back all the way to 220, where there is some little bit of a support resistance here, and still be in an uptrend. But short term, look at this RSI dipping. We got a pierced by the parabolic SAR. The EMA is rolling over. I think you just have to be really just watching these ones. If you do want to catch them after they've hit the ground. There's a saying in trading, don't try to catch a falling knife. Let it hit the ground. Let it sit there for a bit, and then you can safely pick it up. Here's Ethereum. Ethereum was the one I liked the best this week, and I had a couple of orders sitting out there saying, hey, if we break out above this 1980, I want to be in. And you can see it just never got there. So this is a pullback, no question, a little bit of a pullback. Take a look at a daily chart. On a daily chart, it still looks really good on a daily chart, just for the short term, not looking to touch it. Litecoin, same as Bitcoin Cash, had its big run. It could come all the way back down to the 93 area and still technically be in an uptrend. So cryptos right now, we had a big run over the last 2 weeks. They just are pulling back and they're tired at the moment. This is the currency that I am the most interested here. This is the dollar basket. As you can see here, we are right in the middle of this range. We are sitting right on our EMAs. This is the daily chart. We'll take a look at a shorter term chart here. But we are just right here, just sitting right here in the middle of this range. And you can see the middle of this range has acted as some support and resistance. I think we can use this point as either, hey, it's going to bounce here, or it's going to turn and roll over. If it does bounce here and puts it together a little bit of a rally, I like dollar here on the long side. Here's a 4-hour chart. You can see we hit some resistance back in here. We pulled back a little bit deeper than we should, but when we take a look at the velocity here, we are seeing lots of good things happening in velocity. Parabolic SAR has been broken. EMA that has been going down for the last 3 or 4 days is starting to turn up. RSI is back up above 50. It's not all that steep. This is one of these where I'm saying, okay, I'm getting interested, but it's definitely not giving me a signal yet. So someone would ask, okay, Rob, what should the signal be? Where is the signal? I would like to see this resistance clear out. That would be a very good sign that we truly have turned. As you can see, we're still probably a day or two off on this trade. Yen was my favorite short for the week. Let's check in on the yen. And we talked about how overextended the yen had been to the downside. Here's the daily chart. We said, okay, look, we understand this is overextended to the downside. Any short-term pops, you want to be a seller of yen. And we got a little one here. I think the yen looks good here for a short entry. We'll take a look at specific currency crosses and find out which one is the best one. But we had a nice little pop here. Look what happens after it pops and rolls over again. We've seen this a couple times. These little pops, these are entry points. These are absolutely entry points as long as this trend stays intact. Let's move over here to the euro because the euro was my second favorite currency on the week. And it has been not good. This is where, again, you look at the markets and you take these, I call them premises or prognoses or analysis, whatever it is. And then you see, is the currency living up to my analysis? And this euro has absolutely not lived up to the analysis. I thought we were going to get a nice bull pullback and a bounce here. And it did not. It failed. I can't hold on to my premise. I can't hold on to my analysis because it was wrong. And this is where, as a younger trader, I used to say, but wait, I know I'm right. I'm convinced I'm right. I did the analysis. The market is always right. The faster you can get that through your mind as a trader, the market's always right. If you say it should go up and it goes down, guess what? You're wrong. Your analysis was wrong because the reality of what happened was not what you thought it was going to be. So for me, I've got to back euro off and say, hey, I'm no longer looking to be long euro. I need the euro to show me it's going to actually move higher. I come over here to the Swiss franc. Swiss franc I was fairly neutral on, and you can see it weakened along with the euro. Okay, you could say, hey, Rob, but look at this. We're reaching down to some support points. We're starting to get a flattening. Okay, sure. You could say maybe Swiss franc in 2 days will be an interesting trade, but right here, right now, it's just not interesting at all. Let's jump over here to the pound. The pound is high basing. The pound was my favorite currency, but I said it's just not ready yet. It's not ready to go. It's building more energy. Now, a lot of times these bases can have a slight upward trend line, which makes them what's technically called an ascending triangle pattern. As you can see here, we have this ascending triangle here. Each time it comes down, it goes down a little bit lower. Ultimately, a lot of times these things get squeezed. So imagine you're squeezing a watermelon seed between your finger, putting more and more pressure on it. Eventually, it shoots out. I think that's what's happening here on the pound. I really like the pound to the upside. The problem is it's not doing anything at the moment. We want to be there when that seed squeezes out of the top of this range. So we will take a look at some pound crosses, I'm sure, because the pound looks great for trading over the next 2 weeks, it just doesn't look great for trading for right here, right now. And you know, the CAD is not as strong as the pound. And you can see that we're moving back down here into a support level of where we broke out. Okay, so we're to a support level, but the question is this ready to trade now? The only thing we have is a bounce off a support level, but we have no signs of any momentum coming into this on the long side. We have EMAs coming down. We've got parabolic SARs that aren't looking well. RSI is coming up, but it's at 39. It's just not ready to go yet. Question would be, when would I be more convinced? If we could get back up above this resistance. If we can get above that resistance and hold it, I would very like to be long CAD, but until then, it's definitely not going anywhere. Pulling up the Aussie, and you can see the Aussie, this is just a 4-hour chart. You can see it went up a little bit. This move is a whopping 30 pips. There's just not a lot of meat there. This right here was the RBA. Went down about 30 pips, and then it recovered it. I don't see any energy here. I see no momentum. So for me, the Aussie is just a flat old zero, and I don't trade zeros. And then let's end this off with the Kiwi, because the Kiwi has been the strongest one this week. And you can see the Kiwi has broken out of this resistance level, which is really nice. And we're not giving this gain back. We're holding these gains, and we are high basing. So the Kiwi is actually showing the most relative strength at the moment, which means that it's likely to be the strongest currency over the next 24 to 48 hours. We don't know that for sure, but that's what all the studies show when you look at trend and trend following. Kiwi is the best currency right now to buy, period. And frankly, it's the only thing I'm interested in buying. So let's pair up my favorite on the long side, which will be Kiwi, and my most favorite short, which is yen. Before we jump in that, let's just check here on our board here. So in the short term, Kiwi showing the most momentum. Pound, building energy, but not ready yet. Dollar, I'm watching that dollar, seeing if we can get above those levels. Everything else is to the downside or flat, and the yen is really the only thing to take a look at. So let's look at that one currency cross, Kiwi yen, and then I will turn it over to our traders, and you guys can ask me what you want to take a look at, because the only thing that's interesting to me right now is Kiwi yen. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? Let's take a look first at Kiwi yen, and let's take a look at it first on a daily chart. The daily chart, it just blows me away that even like when people are shorter term traders, they don't look at the daily chart. And it's like having a map of where the road is about to go. Or if you are into racing, it's like having your navigator in your seat saying, hey, a mile ahead, there's a really sharp turn. You need to start braking now. The daily chart, even if you're trading on shorter term charts, it's telling you, hey, this is the general direction it's going, or hey, we're reaching a resistance level. You need to be cautious here. If we take a look at the daily chart on Kiwi yen, there's nothing on the horizon saying, be cautious, watch out. This is a really nice run higher. And we pull back, we held that support. So look, we've had 3 green candles. We're getting this little doji here. We're just getting a little bit of a pause. The only question is, when is this pause going to be over? And I don't know the answer to that. But right here, right now, 89.70. 89.70 is going to be the level where, for me, and again, remember, I only trade when there's going to be energy. And this is where it's very different. I'm a very different trader today than I was 10, 15 years ago. Back in the day, this would qualify. I did all my work. I did all my analysis. I said, hey, Kiwi's the strongest, Yen's the weakest. I have a nice high base setup. I would go ahead and make this trade. I've been doing this now for so long, I'm thinking, why is this going to break out and run on a late Wednesday with no real news coming out? Okay, we got the FOMC meeting, but the FOMC minutes, but that's going to affect the dollar, really. So here I am in Kiwi Yen. It just had a 3-day run. It's Wednesday, middle of the day. Where's the catalyst? And this thinking has really helped me avoid the lame trades that I used to make, where like on a Wednesday afternoon, I'd make a trade and it would just do nothing for 24 hours, and I'd just sit there and wait for it, and then eventually either get stopped out or finally bail on it because it was so boring. The more you can eliminate those kind of trades, then that's going to be way beneficial to your end results of your numbers. If you can just take one of those 10 trades that you should never have made in the first place because it just wasn't the right time, and maybe you made it because you were bored or because, hey, I want to do something. If you can take those away, I'm telling you, your results get so much better. And at a certain point, as a trader's progression, that becomes the only thing to fix. They know enough about charting. They know enough about this. How do you get them to not make that 1 out of 10 trades that they shouldn't have made, or that one mistake they made where they sold too early or held too long? That's really where trading is won or lost. So look, this is a great setup. This has everything a setup needs in order to make a trade. The problem is I hate the market backdrop. I hate the fact that there's no real energy. And so because of that, I don't trade. I do not trade in these kind of situations just because there's a setup. I trade around energy. And right now, I'm not seeing the energy. So there's my one trade for you. And then I basically said, I'm trying to talk you out of it as much as possible. All right, I've got questions for pound CAD to the long side. All right, so let's talk about this. So remember, in currencies, we're always pairs trading, pairing up strong against weak. And the pound is definitely the strongest currency right now on a daily chart. Kiwi's starting to get there, but right now, pound is still looking good. Short-term, pound is going sideways. If you take a look at this currency cross, you're getting the movement today. So right now, the pound CAD, you take a look at it, is, sorry, I saw it earlier. Pound CAD is up 60 pips. It's up 0.36%. Where is that move coming from? Is it coming from the pound? Well, the pound basket is up slightly. And you can see the CAD basket is down slightly. And so, yes, this is basically, and then this is what I do to look at, like, where is this move coming from? You can see it's half from the pound and half from the CAD. So a lot of times when you look at this and you say, oh, because at first glance, I was thinking that this was all going to be CAD weakness, not really pound strength. And if that was the case, if I took a look and said, hey, this 60 pip move is more about CAD weakness than pound strength, I would say let's pair up CAD against the Kiwi. That's the strongest. That's going to be an even better trade because right now the pound is not the strongest. The Kiwi is. This is about 50-50. Took a look at the pound basket and the CAD basket. So they're both doing their thing. Okay. Base, long base, breakout. It worked out a little bit of its energy. If you are not in it already, I'm going to give you the two answers here. If you're not in already, I think a pullback to this 168.50 area, this would be my spot, being like, hey, I need to see a green candle here. And then if I see another green candle over here, I'm going to go ahead and enter the trade. But I'm going to come back to the last trade that I looked at. Where's your catalyst? Where's the reason that this pound CAD is going to run for the next 12, 24 hours? I don't think there is one. So I think, yes, you're taking a setup. Can you pair this up? Now, if this was like Friday morning, right before the Canadian employment report, I would be going wild about this trade. Hey, this is looking really good. We're going to get a big burst of energy. And if that CAD employment report is bad, oh my gosh, pound CAD is a great trade to make. Here on the Wednesday, I'm just, again, it's just a lower volume volatility environment. I try to make less trades than more. But if you're taking a look at it, a pullback to the 168.50 area would be the buy spot. Not the buy spot, but where I need to see a green candle. I need to see the confirmation candle next to it. Then it's ready to go. But pound CAD, it looks okay. But here's the question. What about Kiwi CAD? We identified the CAD as showing some weakness. And then we looked at it, the pound against it. But then the Kiwi looks even better than the pound. So if you're playing the trade, if the trade was based on, I think the CAD's going to weaken, I think you play Kiwi. If you're playing the trade because, hey, I like pound and I think pound is going to break out of its high base somewhere soon, then you would want to play pound. But right here, right now, Kiwi CAD is a superior trade in my opinion. And the question is, where's the entry? It's hard on these. This was a pretty good entry back here, 81.63 off a high base breakout. We got another little base here. I'm going to have to point you up to 82.30. 82.30 is the next level that you could be buyer. Unless you get a pullback. We could get a pullback to this little base area, 81.90. 81.90, we get a little reversal candle here, a little green candle, and I think it's okay to buy it. These ones are hard. And I say they're hard. They're hard for newer traders. I used to hate these charts because I'm like, where's the entry? Sometimes it's just more important to get into a trade than to get the perfect entry. And this is where pyramiding works really well. When you have these trades that don't really pull back, they don't really give you great entries, but the direction is very, very clear. Taking a third of a position and then waiting. And then if it keeps going higher, you take another third of a position. And then you'll take your last third of the position. You can see the entry point wasn't all that important. It was more important just to get into the position. So I do like Kiwi CAD for immediate trades over the next 12 hours. Much better than pound versus the CAD. Great questions, everyone. Let's go ahead and wrap this up here. So this week, equities are going to be no help, especially Wednesday and Thursday, probably on Friday with the employment reports. We'll get some big moves, but until then, I don't love trades Wednesday, Thursday. I just don't. I think Friday is going to be the big day where the big pips are going to be made this week. Well, thank you so much for joining me. It's always fun to do a live session with our traders. Everyone take care and have a great rest of the week. And I will be doing the payrolls report on Friday. So if you can join us Friday morning, come join us live. We'll be trading the U.S. and Canadian payrolls report. Goodbye, everybody.